Hiya, I'm Elliot from Free Life Financial, and today I'd like to talk about mortgage lending criteria. There are so many different lenders out there and they all have different rules, different criteria. There are a lot of variables that can impact your chances of being accepted for a mortgage, so that's what I'd like to talk about today. Let's start with just a few examples, and these are just a few examples. There are so many different types of criteria to bear in mind, but just a few common examples. One is employment, the type of employment. You might have a permanent contract, but you might be on a fixed term contract, a 0-hour contract, an agency worker. Lenders also differ with criteria when it comes to self-employed applicants. And then there's also adverse credit. So for example, missed payments on credit commitments or defaults, CCJs. Lenders also have different criteria when it comes to the property itself. For example, a new build house or a new build flat, or an older house, older flat. And then there's the types of income. Of course, you've got your basic salary, but then you've got the other types of income like commission, overtime, allowances. Lenders have different rules on what types of income they accept and how they assess the affordability based on those incomes. If you're using a mortgage broker or a mortgage advisor, then it's going to be their job to look out for these things. So they will be able to look out for these different types of criteria and steer you in the right direction. If you were going it alone, then this is something that you'll definitely want to look out for. Now, sometimes this information is available online and sometimes you might have to call the lender, but always check directly with the lender that you are considering a mortgage application with and double check their criteria in the areas that could impact your application. Now, some people won't need to worry about lender criteria as much as others. Now, one example would be if you were looking to purchase a property that's not a new build and you've got a 10% deposit, you don't have any adverse credit, you've never missed any payments on credit commitments, no CCJs, no defaults, and you're in permanent position with just a flat basic salary that's the same every month, you would generally find it easier to find a suitable mortgage lender. But then another example is somebody who's looking to purchase a new build property with only a 5% deposit. Some lenders have different rules where they might require a larger deposit for new build properties, so it might be more difficult in that case to find a suitable lender. If you then had adverse credit, for example, some missed payments on a credit card in the past, then you'd need to find a lender who's suitable with the 5% deposit for a new build property, as well as being able to accept an application from you when you've got the adverse credit history. So let's look at some examples of criteria where lenders can differ. These are just examples. I haven't taken this criteria from specific lenders, it's just hypothetical. So let's start with employment, a new job. We've got lender 1 who says you must have at least 3 payslips with your current employer and you must have at least 12 months employment history with no gaps. Lender 2 who says they just need 1 payslip in your current employment, but you must have been employed in the same industry for at least 6 months with no gaps. And lender 3 who says you just need a contract that starts within the next 3 months as long as it's a permanent position. Another example would be missed payments on a credit commitment. So lender 1 says no missed payments at all within the last 2 years. Lender 2 says no missed payments at all within the last 6 months and a maximum of 2 missed payments within the last 2 years. And lender 3 says there's no exact limit, it's just subject to a credit check. These are just some of the many types of criteria that you'll need to look out for when you're choosing a suitable mortgage lender. In some cases, you might find a lender who's suitable based on your criteria, but they might have a slightly higher interest rate. And you might get lucky, you might see a deal that's really, really great and that's the one you want, and it turns out that that particular lender is flexible in the areas of criteria that matter to you. If you're unsure about criteria, I would recommend speaking to a mortgage advisor, a mortgage broker. If you were going it alone, then just do this research in advance. And other than that, I wish you the best of luck.